Adam, I wonder what role you think the Iran story is playing in the market's thinking right now. The latest news lines from the Wall Street Journal suggesting that perhaps we're in for a prolonged closure. We'll have to see whether that is substantiated by the US administration. We just don't know, do we? But I wonder what reaction function we're seeing in markets to that kind of news versus earnings stories versus all the other news flow.
Yeah, definitely. I mean, I think a part of the case we've been making over the past few weeks is the equity market is content to look through Iran as long as there's no material escalation, which we're not seeing at the moment, and there is some progress towards a deal. I mean, obviously, the latest Wall Street Journal report is negative on the making progress element. And, if you look at Brent, that's up around 30% off the April low. Betting markets are increasingly pricing the probability that Hormuz will remain closed until the end of June. But I think what we've seen in the equity market is just very much what we've seen at every juncture. They want to take, the most positive outcome and run with that. And I think there's maybe some hopes this is just a negotiating stance and things can turn on a dime. But also, I think there's an element of market bandwidth. You've got an exceptionally busy week of earnings. You've got a busy central bank docket. And in the interim, Q1 earnings aren't really reflecting the impact of the Iran conflict yet. And then also as well, the data capture isn't really showing us too much about it as well.
Yeah, and we'll get that inflation data out of Spain shortly, of course. So markets bandwidth, I like that. Is today more about the earnings story for the markets than what's happening in Iran?
Absolutely, I'd say so, definitely. I mean, if you look at the big four aftermarket, their market cap themselves is 15% of the S&P 500. So if you're an index trader, obviously that's important, but there's the ripple effect beyond those companies, all their customers, suppliers, across AI, cloud computing, advertising, etc. If you look at the SPLC function on your terminal from NVIDIA, those four account for nearly 50% of NVIDIA's earnings. They're the biggest company in the S&P 500. So I think, in terms of earnings themselves, I don't think Q1 results will tell us too much. It's more about what does CapEx say, what's said on the conference calls. And for CapEx, it does appear to be a little bit of a sweet spot where, markets don't want these companies to be too frivolous in their spending, but also they don't want them to rein it back too much. That could be potentially negative for the AI trade, which we did actually see a little bit of signs of wavering yesterday. We saw that OpenAI report, which was clearly a negative. And, so I think if you kind of do see, if you consider how narrow this rally's been, if you do see negative read on that front, particularly as well as some negative Iran news flow, that could pose a headwind for stocks.
What do we look for at the Fed then, Adam? I mean, this probably might be Powell's last as governor, as chair, but then he might stay on. I mean, any guidance around that could be interesting.
Yeah, I mean, the decision itself isn't really particularly interesting. We're looking for an unchanged rate. There's no dot plots, and the market is very much moving towards what does life look after Powell and what does this Fed, look like under Walsh. I think, obviously, if he does stay on as governor, that could potentially elicit some response in FX and bonds, as, Walsh had potentially less of a tighter grip on the FOMC. But for stocks, I don't think they'll be too fast. It's all about those large cap earnings.
Adam, thank you very much indeed. Adam Linton from Bloomberg Markets Live on what to focus in on when it comes to the markets today. There's a lot.